And we're on the New Zealand Yen on the daily time frame, and there's a trade which I've just got in and it's actually on the dailies. Now I can trade the daily time frame if it's within my 100 pip maximum rule, and this trade is. And typically I don't like to trade the dailies because what tends to happen is you sometimes can miss a lot of lower time frame trades which can add up to more pips than just being in one single large trade, which may go on for several weeks. But this isn't the biggest of daily trades, but nevertheless what I like to do is just clear this off and talk you through the trade. So I'm just going to zoom out, and 1 second while I refresh the screen. Okay, so I brought on the VS1 levels, and you can see that what's actually happened if I put a structure level in here. We've come into the 7500 flat, and we have a small amount of structure at this zone. In fact, looking here, you're able to see that structure. It was more historic than recent, and we've had a test there and then a violation there. Nevertheless, we've seen quite a large rejection this morning. Now, if we look at where the market has come to, which is here, which has come down to, we actually tested almost the 7200 flat, which is there. You can see that this zone has been tested multiple times in the past, and what I'm looking for is a retest of that zone again. And the reason I'm looking for a retest is because look at what the market has been doing on the daily time frame. We have been in trend, and so all I'm looking for here is a continuation of that trend. I will not be looking for the trend to go lower, simply for that retest. So what was the trade that I got involved in? Well, it's something which I came across when I did I think my third or fourth lot of backtesting a particular setup, and it's very similar to a flag. So what happens is you have a very momentum move, usually just one candle. However, it can be multiple if they are all directional, and as you can see, all these candles here are bearish bar one, this little indecision candle. And then what we've done is we've simply just moved up sideways. So typically you'd look at this as a flag. This is not a flag. It's we don't have fluid movements like this, channeling. We don't have that, and we don't have it on the time frame lower, which is the 240 either. But what you're looking for is you're just looking for the market to come up, usually to a structure zone or to an even handled number, and as mentioned, we have both of those. There's the 7500s, we have structure looking left, and you're looking for the big rejection. Now this daily candle won't close for another 17 hours, something like that, 15 hours, but if we drop down to the 240, which we're able to do, you'll actually see that as we look at these candles, we see one candle that stuck out, and it was this big lower low, lower close. And just look at the rest of the candles, they're all small, and they were just consolidating upwards. What we have here is we have a momentum move higher, two indecision candles followed by a lower low, lower close, giving us a nice 3-bar reversal. And so I was able to use that as my entry. And so this type of trade again has quite a high success rate. So let me bring back on the figures. And so all I've done here is just go another 12 pips I think above the high, so my stops are at 75.20. The reason for that is I am not looking at the market turning. I'm looking at the market simply continuing based on the fact that we had this momentum move lower. The market has just been consolidating sideways. This is relief, and so I am now expecting a rally to the downside. So targets will be 20 pips. In actual fact, bear with me, I can actually take them to the bottoms there. I have only just entered this trade, so I haven't fully positioned my targets. So 72.62 for targets, but my stop is correct at 75.20, just above the even handled number. And so that means in terms of risk, well, we are risking this much. And in terms of reward, it will be this much. So a very healthy risk to reward there. There is a possibility of getting a little bit more out the market, but that is not something I would be interested in. I want to be out at the safest at the earliest possible time before the market could potentially turn on me. So that's 93 pips of risk, and we're looking at a reward of 165 pips. So a potentially longer term trade. However, I am expecting this to rally, so this may actually be over within a week, but we will come back to the trade and see the outcome of it. And we're back. It's now 8:20, and it's the same day. We've seen quite a large rally today. I was expecting a breakout. It is always nice when not only the analysis plays out, so you know, you make your prediction where your entry stops and targets are and the trade wins or even loses. It's always nice to do the prediction though and it win. But to make the prediction at the level where you think you're going to see a very big rally as well, and the reason why you think that rally could happen, is very nice to see. Now this candle has another hour and 40 minutes to go. A lot could change. We could spend that entire time retracing and I could go into arrears, but we did get the initial rally that I was expecting, and if we can close somewhere like this, then with this being such a big momentum candle, I would anticipate a relatively smooth run down to targets, or at least for tomorrow's candle anyway. But you never know, you know, we could see quite a large retracement back up to that trend line, and then during the last few hours it just drop and make another new low. But either way, I just thought I'd pop in on the video and just give a bit of an update. And 55 pips up currently, obviously a long way to go to targets. I have adjusted targets slightly once I did another review on it, just to be a little bit more conservative, and we'll come back, see if it wins or loses. And we're back, and I'm doing this as an interim video. We haven't yet hit my stop loss or targets, but we are pushing down there quite strongly and up currently 122 pips. I have adjusted my targets slightly as I've been reviewing this constantly for targets. I have changed them from usually the very lows here to just above, based on the lower time frame, the 240 and the 60-minute. Obviously the last thing I want for this market to do is to come down and then really just reverse at this point. So I put them in the most conservative place possible. So that's 72, 79s. It just ensures that the lower time frame structure levels are all hit. So I obviously want to be out this market as soon as possible, and we got the reaction we were looking for. The breakout very strong, and we've done nothing now for the first 3 days be bearish, and it's only early, it's only 9:20 in the morning, but we're pushing down quite strongly here. So there's a potential that we could push down really and hit targets today, and if we do, this will be a very nice winning trade. And this is the final part to the video, and I've now been taken out for protective stops. We came within 10 pips of my target, so I was able to move my stops to above the lower time structure levels. We've just had European news come out and we've seen quite a large rally. We've seen around a 50 pip move in 30 minutes or so, and so I've been taken out for protective stops of 88 pips.